What's going on, ladies and gentlemen? Welcome to The Average Investor, where anyone can build wealth, even the average investor. And in today's video, we're going to be going over my top 5 favorite index funds. First and foremost, though, we just smacked past 4,000 subs, which is insane. It's definitely the TikTok game. When you do well on TikTok, it's going to reflect on your YouTube. So for those that are debating starting their TikTok for a business or to push their YouTube, definitely do it. Also, I do want to add, I went to the eye doctor like 2 days ago, or an eye exam, and I need glasses, so that's cool. Please keep in mind that I am not a licensed professional. I'm not a financial advisor, so all of this is my opinion. If you do decide to look into these investments, make sure you consult with a professional or financial advisor before actually investing. Now, if you're like me and you don't want to be sitting around all day staring at your computer screen, praying that your stock or your option goes your way, and you just want to set it and forget it type of investing style, then index funds and ETFs are your style. If you don't believe me, definitely read this book. It's The Little Book of Common Sense Investing by John C. Bogle, who is the guy who invented and basically created index funds. He knows more than me. Also, he says this is in his own words, the only way to guarantee your fair share of stock market returns. He has the word guarantee in there. That's him, not me, but index funds are awesome. Then again, on this channel, we are playing the long game. I'm a long-term investor. I'm not gonna be buying these index funds and selling them next week. That is not the idea of this. The stock market, in my opinion, is rigged for the long term. Also, please keep in mind that these are not get-rich-quick schemes. This is not the next Dogecoin, nothing of that sort. These are the type of investments that are gonna do well over a long period of time. I'm a long-term investor, so I'm gonna be practicing what I'm preaching. I hold all of these index funds as of now, so let's get into it. But before I give you guys the top 5 list, make sure you subscribe to the YouTube channel. If you have not, definitely smack that thumbs up button because it helps me out so much to push this video to more people that want to get into investing. So once you've done that, we can move into the video. Guys, I do want to highlight that all these index funds that I'm about to break down are going to be on Vanguard because I personally use Vanguard, so I want to practice what I preach, and obviously I'm a little bit biased towards it. But the biggest concern and always the biggest question for most people is, what is the minimum for me to buy into one of these index funds? And that's going to be $3,000. But I will leave the ETF equivalent as well, which will be much less than $3,000. Coming in at number 5, which I think is an absolute sleeper because so many people are focused on the highest amount of returns. They're not focused on a safety net and diversifying their portfolio. So number 5 is Vanguard's Total Bond Market Index, or BBTLX. The ETF equivalent is BND. So right off the bat here, guys, you're gonna see that it is a 2 out of 5 on the risk potential. So that means it's gonna have less risk, which means it's gonna have less reward. Again, this is not going to get you rich overnight. It's gonna be your safety net of your portfolio. He says this fund is designed to provide broad exposure to US investment grade bonds. So again, it's gonna be that safety net. So when the market is dipping, you're not gonna tumble all the way down with it. This is gonna help give you some stability and again, some diversification. That's why it's number 5. Coming in at number 4 is definitely a little bit more risky, but more reward. And it's for the people that want to get into real estate, but don't want to go out and actually buy and manage the property themselves. So what we're talking about is a REIT, and more specifically VGSLX, which is Vanguard's Real Estate Index Fund. ETF equivalent is VNQ. So a REIT, what is a REIT? A REIT is a real estate investment trust. So again, you're gonna be getting into real estate. It's gonna be buying into all these hotels, these office buildings, but you don't actually have to own the property and manage the property yourself. That's pretty cool. Comparatively to the last one, a bond being a 2 on the risk scale, this is gonna be a 4. So more risk, more return, just keep that in mind. What is entailed within this index fund? This fund invests in real estate investment trusts, REITs, companies that purchase office buildings, hotels, and other real estate properties. Keep in mind also that you're gonna have a higher income from dividends with a REIT than probably more than you'll see with stocks and other index funds. Vanguard does mention that since it invests solely within the real estate industry, and it may be a little bit more volatile than the more broadly diversified index funds. Again, this is gonna be a little bit more risky, and since inception, it's gotten an average return of 10%, which is really, really good. Again, this is gonna be for the people that wanna dip their toes into the real estate world without actually owning that property. Again, you're not gonna get the benefits of leveraging your money, but it does add a cool slice into your portfolio. That's why it's number 4. Coming in at number 3 is Vanguard's Total International Stock Index, which is VTIAX. Its ETF equivalent is VXUS. Now, the reason why I think this index fund is super interesting is because there's a big focus on the US market because it's such a business powerhouse, but you don't want to miss out on any of these other countries that are also thriving as well. So adding this index fund within your portfolio will add another layer of diversification because now your scope is larger than just the US market. But something to point out right off the bat is the risk potential is 5 out of 5. Now, why is it a 5 out of 5? Well, Vanguard says this fund offers investors a low-cost way to gain equity exposure to both developed and emerging international economies. So when you're investing in these up-and-coming countries and these economies that are just now developing, it's gonna be a lot more volatile, which is gonna mean it's gonna be a little bit more risky than just investing in the US stock market index fund. And as you can see here, here's the portfolio composition of how exactly the fund is distributed across different international markets. Coming in at number 2, which is more of a personal preference of mine because I think there's gonna be more of a focus and a shift towards healthcare due to COVID and the pandemic. That's why I'm putting number 2 as Vanguard's Healthcare Fund, which is VGHCX. And then the ETF is VHT. Again, this is more of a risky, more reward. It's a 5 out of 5 here on the risk potential, but what exactly does it entail? For more than 25 years, this actively managed fund has offered investors low-cost exposure to domestic and foreign companies involved in various aspects of the healthcare industry, such as pharmaceutical firms, medical supply companies, and research firms. I think companies and governments are gonna be pouring in tons of money so another pandemic like this doesn't happen again. That's why I think the healthcare fund is going to capture all these different companies and you're going to basically have all of them in one fund. Looking at the top 10, you can see we have United Health Group, Pfizer. So like these are some large companies that you don't want to be missing out on. And even this year alone, it's hit a 26% return, which for obvious reasons, it's been a very large focus recently. And I think it's going to be a large focus moving forward as well. Coming in at number 1, which has the most dearest spot in my heart, is Vanguard's Total Stock Market Index Fund, which is VTSAX or VTI. This fund makes it so that you don't have to try to time the market, you don't have to try to buy the next stock that's gonna take off because you can literally buy all of them. We are looking at a 4 out of 5 on the risk potential here. Keep that in mind, it's a lot of stock, so it is gonna be more volatile. This year, it made an absolute slaughter bath of 62% return, which is bonkers. Please keep in mind though, since inception, it's averaged around an 8% return. So this year was an anomaly. An anomaly? The product summary on here says, created in 1992, Vanguard's Total Stock Market Index Fund is designed to provide investors with exposure to the entire US market. Boom, that is crazy. It's one click of the phone, of the mouse, and you literally buy the entire US stock market. If you guys do want to invest in the ETF version of any of these index funds that I've mentioned, go down in the description, sign up for public today. You can invest in any one of these ETFs or all of these ETFs for just $1 a piece, which is mind-blowing. You'll also get a chance to a free stock up to $50, so don't miss out on that. So there you have it, guys. Those are my top 5 favorite index funds for all the people that ask me on TikTok and TikTok Live, what's your favorite index fund? What would you invest in? These are my top 5 favorite for all of those specific reasons. Now, these are long-term plays. Again, we're not getting rich overnight by investing in any of these. I think these index funds can add a super cool dynamic and diversification to your current portfolio if you don't have any of these index funds or ETFs. So definitely go and check them out. I hope you guys learned something today. I hope you now have some sort of an idea of which index fund you would go and invest in, or if you would invest in all of them like I have. But guys, if you haven't already, definitely smack that like button, subscribe to the YouTube channel, leave a comment down below if you have any questions whatsoever. But thank you guys so much for watching the video. Have a great rest of your day.